This is a panel I'm really, really excited for. Meghan Spillane, who is a partner of Goodwin Procter, also been a great supporter of AFC. In Code We Trust, building confidence in AI and digital assets. It was the only way to get both AI and digital assets onto the program by mushing them together. But I'm really, really excited about the panel that's here. Really going to get a diverse viewpoint of folks who are actually doing it today. And Jason, right? Come on in, folks. Get on up here.
Great to see everyone. As he mentioned, my name is Meghan Spillane. I am the co-chair of the Digital Currency and Blockchain Group at Goodwin Procter. I'm a litigator based in New York. I am very happy to be here today, and you're going to get, as he said, a very diverse panel of perspectives. I think any conversation I'm involved in recently that involves technology and financial services is talking about AI and blockchain kind of in the same breath. But particularly for institutions that are not so interested in disruption, but just doing their business in an orderly way, there are a lot of pitfalls here and a lot of, I think, trust that we have to build to get confidence in these new technologies. So before we begin, I'd love to just go around the horn. If you could just each introduce yourselves, please.
I will keep it brief. Jason Mikula. I publish Fintech Business Weekly. Spent about 10 years in the consumer lending, consumer credit space before that.
Esty, Scheiner, co-founder and CEO at Shiboleth. We automate regulatory compliance for financial institutions.
I'm Ben Melnicki. I'm the Chief Compliance Officer of Cross River Bank, which is an FDIC-insured New Jersey state-chartered institution.
And I'm Dan Chang, General Counsel and Chief Compliance Officer for Thread Bank, which is a Tennessee state-chartered financial institution.
Okay, fantastic. So I think we're going to try to talk about some of the frictions today, but hopefully end with kind of the path forward on all of this and some of the exciting things to come. So Esty, why don't you start us out with some of the challenges you see with the implementation, particularly of enterprise AI?
Yeah, so I'll give you an example of a standard compliance function that we're trying to automate. For example, running a regulatory test. And let's think about the different parts of running a regulatory test. There's someone who's making the test script, someone who's sending the emails to the business owner asking them to upload data, somebody who's taking screenshots and PDFs and compiling them in perfectly organized folders with great labels. And then that's just the beginning of running the test. There's everything from reviewing, approving, creating reports, creating dashboards. Now, we take an AI agent. We take 999 AI agents, and we put them together, and we help them automate this one function of running this TILA compliance test. But the main problem is not a technical problem. It's actually a social problem, because there are 30 people in the organization whose role and the scope of their job will fundamentally change a little bit. Now, the person who's taking screenshots and downloading documents, their goal will be, instead of being process-oriented, it will be purpose-oriented. They'll have to review the output and see if it's actually a real issue. And so, again, the largest challenge that we see in terms of implementing AI in enterprises is not actually technical, it's social. In San Francisco, where our company is headquartered, all the range is about 4 deployed engineers because someone needs to hold the enterprise's hand during implementation to make sure they can get the results they expect.
Understood. Yeah, so it's just really a change in mindset, and especially I know people are always worried about, is this going to take my job, And it shows just how jobs change, and everyone has to adapt. But Ben, what about on the bank side in terms of the implementation of blockchain? I mean, it's all over the place in terms of all the possibilities, but as a practical matter, what are banks currently actually doing?
So that's a great question. I think first, if you break it down to first principles, I think with any novel technology, I think you have to embrace it or at least explore it. You can't push it to the side. And when you talk about the two really major pieces of novel technology being AI and blockchain, or crypto, as we'll just call it more simply, you have to actually address them head on. So what are banks doing? I think you have to separate what are banks doing versus what do banks want to do, or what are they trying to do. So I think we know a lot about this. There is transparency around I think, on some level around what banks are doing today. Right now, mostly you're seeing a lot of experimentation. People are, every day there's a news release around someone is piloting a program with whether it's a card network or whether it's through a partnership with a payments provider or a piece of market infrastructure. But I think what we are seeing, and which is tangible and it's verifiable, you see there are large GSIBs that are custodying the crypto assets to facilitate exchange traded funds, so like Bitcoin ETFs, things like that. Where do banks want to go is something that we don't have enough time. I want to let you ask other people questions. I think you see a lot. You see in 3 potential verticals that really are out there in the news, and they haven't really been commercialized yet. Payments, using stable coins as a rail, and saying, you know what, the technology is there. Can we facilitate money movement just as we did with other advancements in payments technology, whether it's through real-time payments, FedNow, using it as another vehicle to move money. Lending, whether it's through collateralization, using crypto itself as collateral, or just offering products that are leveraging blockchain technology to replace or supplant existing market infrastructure. And then there's this narrative around tokenization, which I think is a little bit more squishy and undefined yet. I think we have to see what that means and how it plays out in practice.
Okay, so Jason, I know you advise all different kinds of companies that would be considering some of these solutions. So what are you seeing as some of the friction points with the implementation problem as they've been discussing?
Yeah, I mean, I think a lot of what Esty said about sort of change management is very consistent with what I've experienced both in my operating career and also now as I report and work on advising and consulting companies. It's about stakeholder management, right? So if you are at a smaller, early stage company, like it's not surprising that you are able to sort of calibrate expectations and make decisions more quickly. It is natural, particularly in highly regulated institutions, that as you grow as an organization, organizations tend to become more risk averse and also slower moving. So then the question becomes whether you are that regulated entity or whether you're a service provider looking to sell to that entity or a third party looking to partner with that entity. How can you help them navigate that change management process, those stakeholder expectations, in a way where they feel comfortable moving more quickly?
And Dan, I'm looking down at you. How are you advising the leadership at your bank about tackling some of these problems head on, and what kind of questions are you getting that show some of the trust and confidence issues?
Yeah, I was thinking about what to say during the panel in the lead up to today, and I thought that it's not just about trusting the technology, but it's about verifying the technology as well. That's the only way that you're going to get widespread adoption, democratization of these otherwise legally permissible technologies. It's trying to figure out how do we navigate that, how do we thread that needle, so to speak, and use these technologies and innovate and provide better services to our customers and our communities in a safe and sound manner. And there's certainly interest. Banks, I think, all understand that innovation is critical, and in fact, there's risk in not adopting that technology as well.
Yeah.
And you've seen examples of that in mobile payments, cloud computing, where the banks have either lost market share or there's been an increase in risk because the banks are playing catch up.
So you mentioned the concept of democratization. Esty, I know you were talking about a paradox of democratization. What do you mean by that?
Right now, we see a lot of small banks and large banks trying to implement AI in their compliance workflows. And from my experience, the small banks come in, the small community banks, they're trying to reach the compliance level that the larger financial institutions have. And we can get them that. But as smaller community banks are increasing their compliance, the larger banks are becoming more pedantic about their compliance as well. And they're leveling up as well. And so there's still this gap between the compliance of small financial institutions and larger financial institutions. AI will lift everyone, but not equalize the industry.
Interesting. Yeah, so compliance and particularly regulation is obviously a whole other bucket where we have to build some trust and confidence. So Jason, there's been a ton of fervor around the crypto task force and stablecoins and all of these things. So what are you seeing in the digital asset industry, and what is still leading to some mistrust even as we stand here today with all that's happened in the past year?
Yeah, I mean, I think, well, the underlying question is like mistrust from whom? We don't have enough time to address like every possible stakeholder, right? But if I think about mistrust and where that may exist, particularly in like on the digital asset side, I think fairly or unfairly, agree or disagree, I think there is a perception that the crypto industry, through its lobbyists, through its super PACs, effectively bought and paid for the legislation that it wanted. The Genius Act and potentially Clarity if that gets across the finish line. I think that creates an atmosphere where there is justifiable skepticism in some corners, whether that's more TradFi ecosystem, and you've seen this in some of the blowback and reaction around the so-called like rewards loophole or interest loophole. And I think you're going to see more of these fights play out in different fora as the rulemaking under Genius goes forward, as potentially Clarity Act or market structure legislation goes forward, of established FIs who have their charter, who work with their regulators, who feel like, hey, I'm doing this right, and now we're fighting on an unlevel playing field. And on the opposite side, new entrants in the digital asset space who are saying, hey, you're using your regulatory moat to keep us out.
Okay, so you mentioned charters. Ben, I saw your ears perk up. What do you think about? What do you think about?
I love my charter.
What is your assessment about the trend around companies obtaining trust charters?
So that's interesting. Yeah. So there's a lot in the news. Let's talk about it. It's a policy summit, right? So there's a lot in the news about almost every day, or at least on a weekly basis, company A, B, or C is trying to obtain or has applied for either, in most cases, it's a limited purpose. It's a national trust charter from the OCC. There are some state licenses. There's been some activity in Georgia, I think, and there's an ILC framework. So I think it's important, because let's talk about that for a minute. Like that's great, because I think this administration has allowed a path for innovation to flourish and for fintech founders to actually find a path to solve their licensing dilemma. And I think that's good, that's positive. What we need to have a truthful conversation about, though, is what those entities can do and they cannot do. So for the most part, that national trust charter is not a full-service bank. And I think we just need to be very clear about that. And sometimes the media portrays it as a bank. It's a bank-like entity. It's a banking charter. That license does not allow you to accept demand deposits and to lend. So it can't allow you to do things like Dan and I are sitting up here entirely. Now, on the other hand, it allows you a path to actually custody crypto assets, which is powerful. It's tremendous. It's amazing. You can hold reserves. We've heard a lot from around skinny master accounts. I think all of this is the way I would say to you is this is exciting for an industry. And whether you're a fintech, you're a bank, you're a regulator, it is allowing. It's almost like a sandbox, but in actuality, in reality, to actually go ahead and to try to obtain a license. The last thing I would say is be careful what you wish for, though, because holding a license means you have to comply with a litany of regulatory requirements. Those aren't lighter just because you are a crypto company or a fintech. You still have to adhere to safety and soundness principles. You have to hire Dan or I. You have to hire a staff. You have to have vendors. I think that should not be lost in the shuffle.
So I guess this is for Dan or Ben or some combination of the two. I mean
to loop you into this, Dan. I'm just saying, you sat to my left. So.
Well, but practically speaking, I mean, are banks actually touching tokens on a commercial basis right now? And if not, why not?
Yeah, again, I think just to echo what Ben was saying, I think there's certainly a lot of interest in exploring that space, but it comes down to what are the rules of the road? How do we do this in a way that's safe and sound? so that we can responsibly innovate and better serve our customers and our communities. And it's about just getting real risk-based supervision versus a focus on process.
Can I add something, Meghan? Of course. So I think just driving off what you said, Dan, is that, again, because it's Policy Summit, like, let's just take a step back. The actions from the federal banking regulators this year were tremendous. They should not be minimized at all, whether it's from the OCC with interpretive letters, the FDIC relaxing its requirements around non-objection through its fill, and I believe it was March. Someone will keep me honest on the dates here. But that it ties into what you're saying, because I think we were unable to, financial institutions were unable to actually engage in digital asset activity without obtaining, we'll call it approval, de facto approval, which is non-objection, and receiving supervisory feedback. Those changes, that the relaxation of that requirement, or the retirement of it, in essence, really, I mean, they allow you to answer that question. Banks are experimenting with digital assets. I think it's a matter of whether those experimentations actually graduate to commercial business lines or not, is what we'll see over the next few months and year.
Right. You're certainly seeing much more openness at DC at the policy level. You've seen the restrictions getting rolled back at the OCC, the Fed, and the FDIC. So certainly things are moving in that direction.
Okay, so a lot of promise. Heading back to the AI side for a second, Esty, another barrier to trust and confidence that I think is worth exploring is just consumer protection considerations. So how are you seeing that as impacting your industry and your work?
Yeah, so I think there's two ways of looking at it. There's consumer facing and regulatory facing. I can start with regulatory compliance facing. The biggest challenges that we see is, number one, data protection, and number two is the expert in the loop. So is a human actually reviewing the responses and approving it? The way that we navigate this is we do PII redaction the second any data hits our systems, and this is really important when we demo our solution to regulators. They want to know that everyone's nightmare is that a data breach will happen through all the data that we're passing through to AI, and so whenever you're
that stuff is already happening.
Yeah, exactly. So, when you're looking at vendors, just make sure, look at their PII redaction policies really carefully. And the second thing is, when we show our solution to regulators, not only do they want us to tell them, oh, there's a human and expert in the loop approving this, but where's that audit log? How do I know? How do I know for every single test that someone actually has their eyes on this? How many changes have they made to the results? How are they calibrating this? And it's not only important to do this in practice, it's for the regulators, you need to show your work.
All right. I guess we're going back over to you, Ben, if you don't mind.
Oh, God, the hot seat. My favorite color is blue. I'm a New York Mets fan, too. So I like pain.
Just from the bank's perspective, I mean, what consumer protection concerns do you have? I mean, there's tons of bank regulation around protecting consumers. How does that implicate when you're thinking about AI or blockchain implementation?
Yeah, that's a good question. I think it's great that you asked it, because I think it's often left behind. People think, I think with novel technology, they think foremost about AML, especially with crypto. I think, because the use cases right now around moving money or moving value, let's just call it value, or some object. I think there's a lot to unpack. The same regulations apply. New activity, same regulations apply for now. We'll see some newer regulations or revisions to them with the Genius Act around stablecoins, and when there is market structure, I think we'll have more there. The clock is on to allow regulators to actually promulgate those rules. Two things come to mind, just to give you what I would think about as CCO, and I do think about, is disclosures. So when you're introducing new and novel technology, consumers need to know the rights, the obligations the bank has to them. So if you think about, let's say you're storing crypto assets, that's not fiat currency. It's not eligible for pass-through, the FDIC pass-through insurance. It's not fiat cash. So you need to understand how you explain that, those risks, there's different risks. So I think, that was a little bit of a problem in mid-23 when we saw a little bit of a liquidity crisis. And I think that, the regulators really did a good job, candidly, in sort of saying, don't forget about this. But with AI also, you have to let customers know what's being done with their data. You have to let them know. And this is not here, we could have a whole panel around data and small business, and Jason can probably school us on all that. But I think you have to think that it's the same regulation and new activity, and don't try to just go too far down the road, and just keep it very simple. I think that's the practice point I would tell you.
And I would add very quickly, like, these are not new challenges, right? Now we're calling it AI or generative AI. Like, machine learning, which is people often bucket under that AI label, has been around for, my entire career in lending, and has similar challenges as far as you still have obligations under Fair Credit Reporting Act, under Equal Credit Opportunity Act, and they're implementing regulations to give somebody a notice of adverse action. How do you go about doing that, and can you do it effectively and correctly when using, this approach versus any other approach?
I would go even further, which is UDAP, right? The biggest risk the thing that I'm most worried about AI is not whether someone will receive their disclosures on time. It's the fact that AI is trained on all this information of happy customers. And the goal is to end up with a happy customer. And so we'll tell the consumer whatever the consumer wants to hear in order that the consumer will be happy. So all of a sudden you have these AI silent failures where you're looking at the conversation, the QA analyst is looking at the conversation, and everything is green. The consumer is really happy, but only a month later or 2 months later, once you start getting the complaints, do you realize that the AI is saying inaccurate things. And that is way, way higher of an AI risk than any of the other regulations is UDAP, I think.
And I guess the only way to combat that is to keep that trust but verify with humans actually looking behind it and seeing what's going on.
Well, actually not only humans. I think the way that you have to combat that is through AI monitoring itself. In order to monitor so many conversations, you need to use, the only way to do this is to use AI to review every single conversation to understand, was the AI agent saying accurate things to the human? And so use AI to fight AI. That's the only way to do it.
I think about that same challenge coming from a marketing background of when I was at Goldman and we were standing up Marcus, working with legal and compliance staffers to review thousands of variations of Google ads, and no one wanted to be in that meeting. It was horrible.
I'll speak for yourself.
Nobody wanted to be in that room. And so
he said,
I think about how would you approach something like that now? It's okay, can I use an AI tool to generate 10,000 ad copies? But then how can I be confident that those 10,000 variations have been reviewed at least to a human standard, which is not infallible, clearly.
So Jason, let's stick with you for a second, just talking about kind of opportunities in the path forward. I know you're in media, which is playing, I think, an important role in building trust and confidence and frankly educating consumers about all these things. You laugh, but what role do you think media is playing either to help or to hurt the trust and confidence problem?
I think it's worth bringing a healthy sense of skepticism to what we see in media, right? And think about who's driving these narratives. It's often the VC investors. It's often, their portfolio companies and the leadership of those companies. They, to be blunt, they very clearly have an agenda. On the flip side of that, media, like any other business, responds to incentives. I don't think I need to tell anyone in here about the pipeline from Forbes 30 under 30 to prison, right? like media plays a role in sort of
correlation is not causation.
In sort of puffing up these stories or these characters, and then when things go wrong, also plays a role holding them to account. So I do think there's an opportunity, as you pointed out, to educate and explain. But I also think a lot of what specifically in this session anyway, the way we're talking about AI, and for that matter, crypto, blockchain, stablecoins, For me, in financial services, those tend to be how questions. Like, how are we going to do X activity, move these funds, or do this back office operation? It's not clear to me that at least in the domestic US case, that those are going to be dramatically consumer-facing experiences. I think there will be exceptions, sort of, okay, interacting with, to your point, like an AI chat agent that you may or may not know is AI, or interacting with something that looks like a PFM tool, but it's wrapped as a chatbot instead of mint.com. But I think a lot of the biggest opportunities from a P&L impact are going to be behind the scenes and not necessarily customer facing.
Okay. Dan, what about you, just in terms of talking with your executive team about unknowns and potential frictions and regulatory hurdles while still trying to kind of push things forward? How do you strike that balance?
That's a great question. It's something I spend a lot of time thinking about in my role. But again, I think it just comes down to applying sound risk management principles. As Jason was saying, as Ben was saying, despite innovation doesn't mean that the regulations no longer apply. You've got to be able to innovate responsibly while still complying with the laws, rules, and regulations. And I think that trust enables that access, trust and verification. And with new technologies, it just comes down to, again, applying those sound risk management principles, verifying that the technology, the AI agent, whatever it is working as intended, running parallel systems against the AI to make sure that it's still identifying the issues and being able to achieve those backup office functions that you're using the AI to leverage as a force multiplier. But certainly the sky's the limit, and I think because this is a policy summit, it's really great when you hear from Comptroller Gold, for instance, talk about AI and the need to adopt this technology, and that if we're going to apply traditional model risk management principles, then we're in trouble, because that's going to be a huge obstacle to adoption.
Ben, do you have anything to add there from your vantage point?
In terms of, I mean, when you engage with your fellow executive team and your board, I think we should probably include the board in this discussion. I think, they're going to be curious, right? They're an oversight function. I think you have to arm them with actually the data points on why there's a commercial opportunity and how you have a handle on this. I think one of the questions that comes up a lot is around mitigants. We say, what are your risk mitigants? I think there are a lot of them, whether they're vendor-based or something that you build, or there's actually a law that prohibits certain activities or rule from occurring. I got to tell you, what we do when we counsel, directors and we counsel other executives, I think what we have to do is not be afraid of the new technology. You have to embrace it. I want to say it again. It's not going away. So I think sometimes terms can be, I don't know if you feel this way, Dan, too, but terminology can be inelegant. It could be, you can almost choke on it when you talk about nodes and decentralized finance and agents. I think you have to really break it down into digestible terms so that they understand it, and you relieve the sort of concerns and anxiety. But look, I would say, I want to be positive about something. I mean, this is not going away again. I'm saying that for the third time. You talk about, I'm old enough to know cassette tapes, to CDs. I had iPod where you had to pay 99 cents, and now my teenage daughter, shakes me down for a Spotify subscription. So you listen to everything. The way that music we listen to changed, and the way that money moves, it's changing, and you have to embrace it. You have to get on board, or you'll be past.
But then why do we still have paper checks?
Well, my mom still likes paper checks. There's something for everyone, Jason. I think
there's a level of stickiness and difficulty in changing consumer preferences, I think particularly in our space versus maybe the music streaming space.
Yes, not the
Now,
best
no more
analogy, but it was on the cuff. I gave you something. So.
I like it.
Esty, what do you think is a cornerstone of responsible AI implementation as kind of a forward-looking idea?
Something I heard was you take AI and treat it like your employee. You give AI employee reviews, and you have careful monitoring in place. You're making sure that the data, the access that it has, the data that it has access to, that it's limited to the highest extent. We see the best AI implementation when the engineer who's implementing the AI is working hand in hand with the business to make sure that the business need is actually being met.
Fantastic. All right, well, with the minute remaining, I wanted to go around the horn and just either a big idea or something you're looking to see in the next year in either one of these spaces that you think will pave the way to increasing trust and confidence. Jason?
I mean, on the AI side, whether or not like the economics of actually deploying some of these solutions makes sense. I don't think I've heard the bubble word yet, but it's like, okay, we've seen a lot of excitement and momentum, but like, do the economics of deploying these tools at scale in real use cases make sense or not?
Okay. Esty?
I've seen a lot of automating different workflows. I'm excited for everything to come together and to understand risk from every single dimension.
And me, I think in all the, again, because it's a policy summit, I think bringing it back, anything that we can see in terms of legislation and rulemaking that addresses some gaps in the AML framework to allow banks to engage with unhosted wallets, non-hosted wallets, I think it solves the KYC problem that's associated with blockchain technology. I think would be real, that'll be on my crystal ball list.
Fantastic. We'll finish this off?
Yeah, I'm excited to see what's going to come out on the policy side around establishing guidelines to use this technology and to innovate in a safe and sound manner. And I think there's a lot more to come on that.
Okay, that's a great way to end. Thank you all for your attention. It was a great discussion.